Well, you and I love your art.
Oh, it's all mine.
Thanks. Thanks.
No, it's all my wife's doing. And kids are up there somewhere too.
That's great. So while we're all here, I'll just tell you, I was on the ACA public policy meeting call just a couple of hours ago. And what we're understanding from our lobbyists, you know, all the PPP money is been distributed. Over 50% of it went to rather large companies. And with 50 employees or less have been without is to take that message back to Washington and say that the next round should be maybe focused more on 50 employees or less. We're surveying our companies right now. We're trying to pull all the information together from the country, the ACA, the Inter Capital Association, to see companies that we did. They're larger companies. They're in Series C or Series B rounds. Our sense of it is that they have a loan relationship with, you know, with their bank. So they have a loan officer advocating for them. But a lot of Main Street companies, small startups, things like that around the country have been ignored, including Boston. My one colleague in Boston, I couldn't believe it. He's like this, you know, if any of you know Christopher Mirabli and Launchpad, it's like the premier company, you know, their angel group in Boston. And one of their companies, they have 50 companies, one of their companies got the PPP money. So we're very concerned about this. We're trying to take the message back to DC on behalf of small companies because they don't have a voice. We keep telling them that these people they don't have time because they're building companies, and they don't have money because they're building companies. And their voice is not heard in Washington. So anyways, doing the best we can. Let's hope the next round will pay attention to small companies, fingers crossed. Brian, I see you're on the call. We're hopefully having some conversations in Harrisburg in 2 weeks. Next week, 2 weeks, week of the 27th, to try to see if we can do something, you know, get something from the, you know, the DCED. And we're defending the bends. So, you know, we're going to be there stomping the halls for you, virtually stomping the halls for you guys. We've got several calls set up. So fingers crossed.
Catherine, that's great. I'm sorry to jump in here, Kit, but I see my colleague John Sider is also on this webinar or this Zoom. So if you need any support or help, or we can pitch in and carry some weight, I know that we'll try. So thank you for all you're doing.
Yes, thank you very much. Thanks, Brian. And thanks, Catherine.
All right, well, we got a majority of people here, and I'm going to be respectful of everybody's time. We're going till about 2:45. So for the edification of some that might not know, I just want to do some brief intros. Catherine, will you kick us off, just a brief intro?
Sure. I'm the founder of Blue Tree Allied Angels and the Blue Tree Venture Fund in Pittsburgh. We've been around for about 17 years almost. We've invested the Angel Group has invested about $55 million. I am former chairman of the board of the ACA, and as you all heard earlier, I'm very active in public policy. I'm still on the public policy committee for the ACA. I'm also chairman of the board of Innovation Works, and I'm an advisor to the Securities and Exchange Commission on issues. So to be here. Thank you. Thank you.
Will, you want to give us just a quick intro?
Yeah, absolutely. I'm Will Allen. I'm an investor. I've angel invested in several tech companies in the region and also across the nation. And I have a real estate portfolio. Former Pittsburgh Steeler, played 12 years in the NFL, and serve on several community boards in town. And just really happy to be here and to share insights and information around what's happening with coronavirus and tech companies.
Thank you very much, Will. We're glad to have you. Ewan, will you give a brief intro to our folks here?
Sure. Hey, my name is Euan Guttridge. Prior to, so I've been in Pittsburgh 4 years. Before that, I was in Google for 10 years. I moved to Pittsburgh to work on autonomy with Uber. I left Uber in November to focus on what I thought was a huge opportunity and a very exciting time to join the startup ecosystem. So we built Reinforced Ventures as an angel group, and hopefully be working with many of you guys in the near future.
Well, thank you all for being here. And we're honored to have three diverse people looking at different sectors and from different backgrounds. So I think today will be very helpful. So just to set the scene, I think we just need to back up a little bit. And can you each kind of give your experiences of sort of where you were vis-a-vis angel investing late February, early March? You want to go ahead, Euan?
Yeah, sure. So for us, I've been angel investing for 10 years now, but in terms of investing other people's money through the syndicate, we were on our third deal at the time, and I can speak openly about it. It was with a company called Up Content, Scott Rogerson from Pittsburgh, fantastic company. And we were closing out an investment in Up Content. So typically with a syndicate, you present the deal to your LPs and then work through who wishes to opt in and to what amount. And we had effectively got the commitments in by the time the coronavirus started turning south and lockdowns were occurring, and then the markets were falling. So we obviously had a concern that, okay, will these commitments turn into wires and we'll be able to close this out? They did. Every single one did. So that was a great sign of confidence in the company, but also, there are fears of liquidity being more expensive, but my experience has not been that, and we did close out Up Content and make a subsequent investment through the syndicate.
I guess I'll follow up. Thanks, Euan, for that great information. I would say like January, February, towards the end of February, early March, I was deep in evaluation of about 4 to 5 companies. And I think once I realized how serious Corona is and was early on, I just shifted gears to look at companies that could be sustainable during this process. I don't have a syndicate fund like Euan. I'm pretty much investing my own capital, or with a group of other angels, we'll put our cash together and we circulate deals together. So at that time, I was really thinking about, how, the risk of continuing to evaluate the companies and the time spent that I've already put in, is it still worth it to continue the evaluation? So narrowed that down and just looked at really durable companies that have some little bit of experience, has a little bit more cash flow versus nothing, and and just wanted to navigate that track.
So we were cruising in January. We came off of November rather, wondering what's happening. We didn't see enough deal flow, and all of a sudden deal flow turned on. We had a number of companies that were coming in for follow-on funding and had, met certain milestones and certainly proven that we were, that they were doing quite well and deserved follow-on funding. And we started with several companies and a good, healthy screening meeting, and doing diligence on 2 new companies. So we were pretty excited, cranking along. Closed in the first quarter. I think I sent numbers over to the ACA. The first quarter, somewhere in the range of close to almost 2 million, which is unusual for us in our first quarter. So we were cranking. But we also could feel things behind us. We felt you know, we were watching in February the pandemic, and as it was moving across various parts of the world, it was bound to come to the U.S. It was just a matter of when. And so we were already talking, where we were on the boards of our companies, already talking to them about reworking their, you know, their runways and maybe reducing expenses here and there, and said, maybe think about it in 6 months. Where we came out of this at the end of well, I'd say a couple weeks ago, is no, this is going to be with us for obviously, it's, you know, for at least 24 months. And we based that on Scott Gottlieb's paper on the 3 phases of a pandemic, and we shared that with our portfolio companies, saying, look, this is going to impact consumer behavior. Think about it, how it impacts, you know, consumer behavior, and how it's going to impact you and how you relate to the markets and to your own specific industries. Now, a couple of our companies are going to benefit from it. Some of them got accelerated into phase 2 trials, or if they had a medical device, they went straight into use with compassionate use patients. So we saw, you know, I mean, right now everybody is putting the brakes on, and Will, I heard you say the same thing. We're looking at switching how we support our portfolio companies, so we're investing more. We're switching our funding, because we aggregate our money into a fund. So we're looking at, okay, instead of 70%, 60 to 70% new companies and the rest in follow-on, we're switching that around. And so we're 60 to 70% is going to be in follow-on capital, and 30 to 40% in new companies.
Awesome. Okay, and that kind of dovetails nicely. Thank you for that. Into my next question. It's so when this news started to happen, and as it's continued, what changes have you made, you know, on your approach to engaging both your existing portfolio companies and then your new deals? Euan?
Sure. In terms of new deals, so I think it's now a case of looking, as Catherine alluded to, where the opportunities are emerging. Who is actually gaining more traction and more revenue and more customers in these times as a result. And so, I mean, concretely, as we were closing out Up Content, we were in reasonably deep diligence in a travel tech company, a transport mobility company, a SaaS business, and an online wine business. And that turned the tables somewhat away from the travel and mobility and more towards the SaaS and wine. We ended up investing in the wine business and actually had a record raise for that because it was a really easy story to tell. You know, effectively, when you're running a syndicate, you're at the it's not your decision what you invest in, right? So you have to tell a very clear story of why you have conviction in a certain company. And to show that, for example, in this case, March revenues were 24% above February, and they had a previous 12-month 13% month-on-month. And then April, you know, early April figures were coming in at double that again. So it was a nice timing, let's say. The valuation hadn't changed yet, the business had changed. So that was easy for us. And in terms of existing companies, I think because I don't have a fund that we could then discuss whether to put more or less in, and you know, as Catherine has that ability with Blue Tree, it was more a case of just keeping our LPs informed and reassured that the expertise that they can provide to our founders is being channeled. While on the other side, you know, delivering that feedback, because with the syndicate, you have a lot of different opinions, right? And so I don't want to pile on those opinions to the founders. And a lot of it is obvious, right? Control your OpEx, reconsider your staffing, think about your runway. Like, obviously they're thinking of that, and they have been making plans towards that. But it was nice to see some of these companies in the few we'd invested in very rapidly pivot what they were doing to take advantage of the situation. And that was reassuring.
Okay. Can you give me an example of a pivot?
Yeah. So like grid-wise, I know Ryan Green was on 2 weeks ago. I was really impressed with how he led his team, not to pivot, so to speak, but to adapt his product, because clearly it was servicing Uber and Lyft rideshare before. And they opened up to Postmates, obviously Uber Eats and other driving services, delivery services, I think within 3 days of announcing the intention. So, the engineering velocity there was great. And so that was also reassuring to our LPs to see that change so rapidly.
Yeah. Yeah, that was neat. I talked to Rich from moving people to moving products within 72 hours. That was pretty neat. Will, how about you? What changes have you made in both your investment kind of thesis and how you're advising investments?
Absolutely. I don't think I made a huge adjustment to investment thesis. I just think that I've refined it from the fact that you're always going to face these critical moments in time, and you're also going to face adversity, just the severity of it. So having those conversations with existing teams and existing founders, it's helped me to really sharpen my sword and my lens from a perspective of the type of companies that can be extremely durable and have potentially long-term cash flow in their businesses. So being able to see that and look at historical information and data on companies that have lasted through these tough times. If you want to go back to the housing crisis in 2008, just looking at the companies that came out of that and the companies that went through it. I think coming out of it is something different than, hey, we were a company before, we went through it and we came out of it. But doing a bunch of that research and then sharing that knowledge, that's been helpful. I had a company that's doing ride sharing. It's not like Grid Ride. They're just a electric bike company, and I think how they want to plant their flag is they have a great plan on planting their flag. But right now, and people are riding their bikes, people are outside, but you think about just the cost, the OpEx of running that business. I don't want to put my capital to something like that, even if it seems promising at this moment, because you don't know how long the duration of being isolated will last. But I did put some money towards a company that's helping college students learn remotely, and they, so it's, and I have been looking at this company for 3 to 6 months, evaluating the company for 3 to 6 months and hadn't pulled the trigger. But, they to Euan's point, being able to, just change a little bit of your model or make adjustments to it and helping the company see that. I think that's the biggest thing. If you as an investor, can help your founders and companies see where they can make slight adjustments either to their pricing models or to the collaboration models to make the customer feel more value, but also have create a different perspective of the value they create, along with making a tremendous product. So, this company went from doing $10,000 contracts to $100,000 contracts and has landed 3 of them during this crisis. So when you think about that pivot and that adjustment and how they view and see the world, it gets you excited for their durability during this time.
Sure. Well, and like that, I mean, 2 key industries, mobility right now, obviously not exactly super desirable. Now, obviously it's building up pent-up demand. And then that distance learning play is just going to continue throughout. I mean, I think that's here to stay. That's good stuff. Okay. Catherine, this isn't your first rodeo. You've been through the ups and downs of the market, and I'm interested to see given the experience that you've been in down markets and up markets, what lessons are you seeing now that maybe either sound familiar from past economic fallouts or maybe even new lessons?
We looked at lessons learned that, for us as active angel investors, and how we could do things differently to support our companies. one of the things, being a CEO or a founder is really a lonely job, and who can you talk to? So we decided, like, what can we do immediately, right away, to surround them with the resources that they need, beyond people being on the board. Sometimes there's this fear of, can I really go to my board and, seek the counsel I need? So we wanted to make sure that all of our companies in which we were on the board of is that, look, this is the time to use your board. That's number one. Number two is we sent out immediately everything we could find, letters that Sequoia sent out, Upfront sent out, all that. We sent that to all the companies right away. Because what you need is ideas. And when you're the lonely founder, the lonely CEO, you got your team, you're trying to bounce things off of. The other thing is we put together a group of our members who aren't on boards, but who have lived through other recessionary periods and had their own businesses. And we sent out a list, and we called them the SWAT team. They could go out and they could be, really come in and tackle things. And we put their LinkedIn profiles with it and said, these people are available to you right now. Use them as you may need that. And then finally, we put together a webinar with key people from law firms and from accounting firms, again, to talk through the CARES Act, but also to deal with any other legal or financial issues that, that they wanted to bounce off of people. So I think what we're trying to do is really what we in 08, 09, we were kind of, I would say, less involved. Now we are like, what can we do? All hands on deck. Let's surround them with resources. Let us know what you need, and we'll get it for you. And we're constantly sending articles, things like that. That's a bit differently in how we behave. I think either Will or Euan said earlier, all you can keep doing is reducing expenses, right? And thinking about how you extend your runway. However, we told people, whatever you do, don't give up selling. Don't give up keeping those relationships warm. I know you're afraid now, you're going to get pushback. People are going to tell you, no, not now, but that's okay. Keep those relationships warm. Don't give up on that, because once we're on the other side of this, you want to be able to flip the switch and flip it fast.
Yeah, that's awesome. The context is so vital, and the resources you're surrounding with. I think especially in a market like ours, that the resources you're providing beyond the check are paramount right now. The experience-based founders and operators that can stand alongside some of the more nascent operations is huge right now. So thanks for that. Euan, I know in a couple dozens of companies that you're in, there's got to be. You mentioned Gridwise. Any other successes that you can kind of brag about that are weathering the storm well?
Well, I have a kind of success stroke amusing anecdote. One of the companies who invested in Onyx Labs is creating ad tech for gaming platforms. And the success isn't the fact that there's a coincidental uptick in hours spent on gaming for obvious reasons. The amusing anecdote is that these are two founders who are working together from their bedrooms. They're actually pretty experienced and not quite middle-aged, but they're not either just out of university. And the point here is that, so they're not paying themselves a salary because they invested in their own company because they don't want to pay income tax on their own investment, right? So when we were chatting through how this is impacting the gaming industry, their product and their runway, it turned out that their runway, if they stuck at their current burn, gives them 15 years of continued development.
Okay.
So, it just kind of reminds you the importance of multipliers here, that if you have two guys that know how to work with each other well, they have the right skill sets to build the product, and it's just heads down building the product. It doesn't matter if they're building a mobility product or a restaurant order taking product, right? They have more runway than they will ever need to just focus on what they want to do and come out the other end with something more ready than it would have been when the market's ready.
And when you have that kind of extremely excess capacity on runway, are you recommending deploying the assets like a little faster than that use of funds a little faster than you would initially?
So, that's a really good question. And I have quite a strong opinion on that. That's informed by an experience I had in 2010. Obviously, 2 years after 2008, I can do the math. Eric Schmidt stood up this is when I was at Google, he stood up in all hands and said, look, I messed up. I completely messed up. I'm sorry. And that mess up was the fact that he turned off the recruiting machine in 2008. And that led to Google falling behind in some pretty significant areas, one being social, and you can trace back that story to your own conclusions, right? G plus, ha ha ha. So, that has educated me to, when asked, give the advice that founding a startup is high risk in whatever environment you're in. And so you're going to have to take bets regardless. And so if, for example, it's hiring and you have found someone who is uniquely suited to your business, hire them now, because you will never find that person again. And there's so much less of a chance you'll find them available at the price you can get them at in a year from now. And so, be aggressive. If you have a very clear goal, be aggressive and do everything you can towards that goal and ignore all the noise around you. And so, yeah, I think a very long-winded way of saying that it's high risk, make your bets and take them, regardless of the environment you're in. Just do it with common sense.
Yeah, I couldn't agree more.
I like that. I like that to add to that, if that's okay. And I think you're absolutely right. I think, but I think it's you experience something at a very high level at Google, but dealing with the same thing portfolio companies is saying, like, what is the best next hire? And I'm like, well, you should do it, and you should do it very strategically, right, and very specifically, and not just cease it, but use that, be capital efficient in everything, in every single area of your business, right? Just be capital efficient and be capital minded, but spend the cash to that be exponential for your business growth. And hiring a specific person and the right person takes a lot of thought. And like Catherine said, lean onto your board, ask them, like, hey, I'm thinking about hiring, I'm thinking about making this next step. How should we navigate this, and what should we pay in this time of crisis for unique talent for our business? So asking those questions and not being afraid to talk to your board, and I think that's key to your growth and coming out of it. So that's a good point. I had to go through that 3 times, 3 or 4 times already. So it's good.
Good to hear.
And there's creative ways. You can offer stock or offer part-time positions. You get their hearts and minds engaged sooner rather than later. And be able to, basically say, when things turn around, we'll certainly, take a look at how we can bring you on full time, or offer more money instead of just stock, things like that. There's a lot of creative ways to offer incentives to hire. If you find a good hire, and I actually think we're going to come out of this with a lot of people looking for jobs, so we're going to be able to capitalize on that.
Couldn't agree more. So I'd like to get, we kind of looked in the rearview mirror for a little bit, and I appreciate all your sentiments on that. I think that was super helpful, but I'm really curious now, given what we know, we've had 30-ish days in this environment. What's your outlook for the next 6 to 12 months moving forward? Start with you, Catherine.
Mine is grim. And I say that because I really embrace the former FDA Commissioner Scott Gottlieb's study of, this pandemic is going to, we're going to see it in 3 different phases, and it will impact human behavior, consumer behavior, in corporate behavior, all of it. And I think we're going to be in this for the long haul, and we need to be thinking about that. I think people are going, hey, we're going to get on the other side of this, and no problem. Already we have a company in our portfolio that works directly with NBC and ESPN and all that, and obviously they've been severely impacted, but it looks like if they go forward in sports, it'll be without people in the stadiums. So, you know, I can think about how you survive. It's not going to be 6 months, it's going to be 12 months, but we are thinking 24 months. And if it's less than that, then great. You survived it. So.
Will, how has your outlook changed for the next 6 to 12 months?
I've just been developing a strong, like similar to what Catherine is saying, but I've just been developing a strong keen of environmental risk and black swan effects like this, and just trying to understand what how do you come out of it, and being in I keep talking about being in a strong cash position moving forward, but regardless of if you're in a crisis or not, you should try to almost be in a strong cash position for situations like this, and helping companies to navigate that moving forward, to be a more proactive, because I think everybody is kind of reactive, and but doing that quarter over quarter, and not just saying, oh, go run your company. No, where's your cash position? How efficiently are you managing your cash? Are you able to execute on everything that you need to meet your measurements, metrics, and goals, while being cash efficient, and helping them to juggle that balance? Because, you know, these tough times are unpredicted, and what goes forward is unpredicted, but you got to control what you can and not live in your fears. So I think those are the things that I'm thinking about, even personally, how to navigate that, and how to help people around me navigate that with all my resources and network. So that's pretty much it.
Euan, how about you? What's the future look like for you? Sure.
Future's bright. I'm optimistic. So the reason is that I think now we have a more focused lens to view investment opportunities through. And what I mean by that is, look, no one can tell the future, and I advise no one to listen to anyone that thinks they can. But it's pretty clear, and certainly what Catherine was alluding to, is that the patterns of behavior that we're seeing now are going to extend for many months, if not years, right? There's going to be a lot more remote working. There's going to be some prolonged social distancing, whatever that means for the future. There's going to be a different mode of how we shop, how we communicate, how we interact. Like, so many human behavioral patterns have changed for the long term, but we can now understand that we don't know what the future is going to be like, but we know how humans are going to behave differently in that future. And so I think that gives, a narrower lens to select opportunities from, and make investments that have potentially lower risk, because it's more evident to you about how people will react to the service or the product in the future, and who the competitors are, because again, it's a narrower field.
You gave some good examples of some advice you're giving to founders, and you were able to brag a little bit. First of all, I couldn't agree with more on your outlook moving forward, but I'd be interested to, you gave some examples of the grid wise and how you change your portfolio. What's the kind of broad stroke advice, or maybe even pretty myopic advice you're giving to founders that you're working with right now?
So a lot of it you heard.
Just the ones that you don't have in portfolio, but maybe you're in negotiations with, or in diligence.
Okay, so I'll start with the obvious. Over communicate to your stakeholders and investors. Manage OPEX and staffing, common sense stuff. Then I guess a layer deeper from my own experience is, look, you're in this business because you have a conviction, because you want to change the world or solve a problem in some way. And you have to do that. It is a life or death, okay, not human life or death, business life or death situation for you, but it always has been. It's just a different set of risks you have to deal with. You have less of the others and more of some new ones. And so, I'm saying, go all in, make your bets, take them. Don't be too hesitant to hire the right people, to build the right features you need at the right time. You're obviously going to have to be smarter about the moves you make. Of course, that doesn't apply to all businesses. Some businesses, unfortunately, may not be able to turn around given the time this is going to stretch on. But this message is more to businesses that, like software as a service businesses, that have low operational overhead, that can scale at low cost, things like that. So just stick with your conviction and go all in and find a way to make it work.
Cool. Thank you. Will, what's some specific advice you're giving now these days?
Yeah, the biggest thing is not get stuck in a silo and running your wheels. You know, I think a lot of time people live out of fear. So I've been just trying to help portfolio companies and even other investors and VCs that I speak to. Just, hey, don't live in your fears. Don't turn your wheels. Figuring out how to solve it by yourself. Learn how to collaborate. Learn how to talk to people. Learn how to focus on your operation, but also learn how to communicate with someone that can help you and help you solve the problem. I think a lot of times people get hunkered down and they get overly hyper focused, and they miss opportunities to connect and collaborate and get good solid information for growth. So that's kind of what I've been pressing, with all companies. Like Euan mentioned a gaming company. I have exposure to a esports platform as well, and they were in the middle of a raise right when this happened, and I could feel the panic. You're talking to a young 22-year-old person, and you can hear their heart beating through their voice. About, hey, we could be, we could our company could fold in the next couple weeks. So you got to keep the human side of it too, as well as the business side, because you are dealing with humans, whether you like it or not. So to me, it's just about meeting them where they are and understanding they have an ally and they got to, tap into the resources and not live in their fears.
Well, I bet he's feeling a little bit better now with how well esports is done, considering. Catherine, what's some specific advice you're giving to both companies approaching you and maybe some of those already in the fold?
I think I would capitalize on what Euan and Will were saying, is that we're encouraging our companies to be creative and think about what you can do for the market now. One company, Angler, has done a great job working with major corporate fishing product companies and being their social platform. And but at the same time, these companies are saying, well, maybe we won't do as much this year now. And so we're saying, what can you do now for your social community? And so they're thinking now how they gamify something. They've done 3 interesting competitions, and by virtue of that, their organic growth of their platform, no advertising, because there's no more advertising dollars to spend. So they're seeing a significant uptick in not just people who are signing on, but people are signing on for a premium. So it's pretty exciting there. So they're being creative about how they reach out and engage their customers. Another one of our companies it's a telehealth play. It's physical therapy. Originally, it was for chronic conditions for for children, because they need physical therapy for their lifetime. But now this company realizes that they can get because I think Euan pointed this out earlier, is that telehealth is going to be approved in more and more states. This is going to open up the doors, and so she's now going for the CEO of this company is going for FDA approval so that she can actually get reimbursed. So versus specialized with hospitals and clinics and things like that. So there's some interesting opportunities and creative, and I think well worth it.
Well, thank you for that. I couldn't agree more. And I think part of this is I think we're lucky to be involved with an audience, categorically, an absolute, that every person we work with is a natural born problem solver. And I think that it's just a matter of rising to the task, right? I mean, like we sort of all signed up for this crazy life of being involved in taking ideas and putting them into market against all odds. And I love the notion that kind of you all three alluded to, and that is we have to move beyond the pause. We assessed and need to keep assessing, but now it's moved forward. I think as I'm talking to both founders and funders, I think a couple of us are finding more time in the day. And conversely, the people we're talking to, partners, investors, customers, new hires, have that kind of a little bit more focus. So I'm suggesting to all my founders, take advantage of that. You know, the definition of how we engage kind of vis-a-vis being at a work day has changed and kind of opened up. And that I think presents opportunities to the natural born hustlers that we work with every day. So thank all of you for everything you're doing. We have about 5 minutes left. So I want to just kind of leave it to you and just put some final words, whatever you have to the audience. Mostly assembled today, our audience is mostly founders. So I think that that's kind of the most germane audience you can speak to.
So if I may, one thing I think I've screwed up many times before by missing opportunities like this. And it's an opportunity to build trust with your teams and your customers. And I know you basically just said this, Kit, but specifically by showing vulnerability, right? That's you build trust through experience. The only way you can shortcut that is by showing vulnerability and authentically showing vulnerability. And you know, I've been in situations where I've not seen that. I haven't read the situation well enough and haven't seen the opportunity to do it. And I hate myself for doing that. I will try to never do that again. So my advice would be that be cognizant of the fact that your employees, your teams, your customers are all humans, as Will was saying. They all have this need for human connection and they're not getting enough of it. And so double down on that budget you use for, I don't know, bacon sandwich Wednesdays or cocktail Fridays. Maybe make the cocktails and bring them around and leave them on the doorsteps of your employees' houses. It will be so impactful to them as humans that need that connection, and knowing that you're thinking of them. Just knowing that they're thinking of you and you're thinking of them make a huge difference to the future, because when you have to make tough decisions, you know, they're going to be easier because your team trusts you and basically loves you because of the moves you have made today. Endeth sermon.
Let me agree with you. One of our last call, Luis Van On was on, and for his team, you know, they have in-house cooks, chefs, and so he's taken some of those resources and allocated and gave everybody across Duolingo a bump just to show that he cares, because they are buying their food on their own all day. And he said that he's materially felt the goodwill return back to him. So couldn't agree more. Will, any final comments from you for our audience?
You know, Euan put it perfectly. You know, honestly, I don't know if I can add to that, but you know, if anything, is just to be, you know, be aware of who you are, you know, and how you and who you want to become, you know, coming out of this. I think a lot of times a lot of entrepreneurs lose sight of that. I think in who how you want your team to operate. Building this culture during this time is huge, and it'll be I think an exponential growth factor to for the future. But I don't have much to add. I mean, I think Euan hit it right on the head.
Catherine?
I agree. You nailed it. And the only thing I would add is that if you're on this phone and you're a founder and you're working through these difficult times, I just would encourage you to be as transparent as possible. Reach out to your investors for help. They want you to be successful. I know one of our companies has been reticent and afraid, and and perhaps past experience was not very positive for them when they had trouble maybe communicating that they need help. And I think when you do that, you actually end up losing the trust of your investors. You want to stay open with your investors and completely transparent and tell them you need help, because they will bring resources.
I can't thank the three of you enough for taking the time today to share with everybody. I do believe it is much more than a trope, that we are literally all in this together. Thanks for taking your time, both on this call, and I know that you both are kind of harried advising founders, so I appreciate the brief break on this. Thanks for everybody for attending. We will have this recorded, and I will share the contact information for Euan, Will, and Catherine after this call. So thanks, everybody.